Hello, Colorado. This is Mace Kochenderfer, Certified Reverse Mortgage Professional with Colorado Reverse Mortgage. Today's video is going to be a pretty straightforward one, and one that I don't know that I've talked about at any length, at least. The question reads, Dear Mace, several years ago you helped my friend Jim get a reverse mortgage line of credit. He said that he works his line of credit to make money on the side. Can you explain to me what my friend Jim is doing? Can you explain what my friend Jim is doing? Well, Jim's not doing anything different than what other people that have large line of credits do. He's using his line of credit. In fact, I know who Jim is. I know who you're speaking about. And just so you know, I've got several other clients that come from the same industry. They're the contractors. Jim's a contractor. But I've had 3 or 4 other contractors get reverse mortgages with the same goal in mind. So it's not a unique. It's not really anything special. But what Jim and some of these others are doing is, well, one of them, it wasn't Jim, it was somebody else, but they said that he doesn't like playing golf and he doesn't like gardening, and he drives his wife crazy. So after trying to retire, he's getting back into contracting, construction, so remodeling, really. So what he's doing in this case, and is using this line of credit. Let's say it's a $150,000 line of credit, but using a portion of the line of credit to buy a home that's dilapidated and needs fixing up. So he's picking up this home at a substantially reduced price because of all the work that has to go into it. Then once he owns the property, it's time to take off the roof, replace the windows, replace the carpeting, rebuild the kitchen, who knows, whatever it needs to happen. So when the roof needs to be replaced, he's pulling out $7,000, $8,000, whatever the roof costs, and paying for the roof to be installed. If he's ripping up floor and laying down hardwood, he can do that himself, but he's using the money from the line of credit to pay for the materials, and he's putting in the labor. He's doing it at a comfortable level. Maybe he shows up at 10 o'clock and leaves at 2. He's not putting in a full day in. He works however he or she wishes. And when the home is finally complete, he lists the house, sells the home. With the proceeds from the sale of the home, he's taking it, and the very next day takes that money and pays his reverse mortgage back down. I've trained him to never pay it off, but pay it down to have an outstanding balance of $100 or greater. And I can talk about that later. The difference between what he got for the house and what he's paid back, of course, is his profit. The reason I tell folks not to pay their loan amount below $100, always be in debt for $100. Yes, interest is being charged on the $100 at that point, but who cares? If it's 5% a year plus the mortgage insurance of 0.5%, okay, that's $5.50 for the year to have this line of credit. But when you pay a loan off, okay, pay it down to a zero balance, the loan automatically closes. And I believe HUD's got some guidelines that say if the loan balance ever trickles below $50, then it's to be assumed that the intent was to pay it off, and that line of credit does get frozen and then closed. So I instruct all my clients to never pay their loan balance below $100, okay? Now, the difference in this case that we were using a moment ago, well, they're available $149,900, right? That's actually appreciating. It's getting bigger over time. The reverse mortgage lines of credit have got guaranteed growth of the interest rate that's currently being charged plus 0.5%. So if today's interest rate is 5% and the 0.5% on top of that, that means the line of credit is appreciating at 5.5%. Not bad, right? So while he's not out there remodeling homes and fixing things, and he is in his wife's hair, that line of credit is growing. So after a year, let's say that line of credit of $150,000 has, again, I'm just rounding here, has grown because of compounding gain on this, right? It's grown to be over $158,000. So over time, this line of credit does get bigger and bigger. But when you're using it and the used portion gets taken out of that growth pool, after the home has been sold and he reimburses the bank, boom, that line of credit starting to, or that unused portion is growing and appreciating again. So again, what folks do with their lines of credit is up to them. Again, I've had 3 or 4 retired contractors who are doing this more of as a hobby, because again, as one of them said, that they just don't like to play golf and garden. So there's other things that folks can do. It just depends on what your specialty is. So I hope that informs some folks out there, maybe opens their eyes. I have had others, again, buy real estate, and people just share with me, because I'm in the real estate industry, that they're buying a rental property or buying a second home and then turning that into a rental property. As long as they're living in their primary residence, right, the home that we did the reverse mortgage on, and aren't moving into one of these other properties, that's just fine. All right, well, I know it was a shorter video. Many of you may give me a thumbs up for that, because I know some of my others tend to go on for a bit. But thank you again very much for watching my videos. If you like it, give me a thumbs up. If you don't, give me a thumbs down. If you would like to hit subscribe at the bottom, that's fantastic. That way, when new situations, stories, or questions and answers do pop up, then you'll be automatically notified of them as they get published. So again, thank you very much. Have a nice day. Take care.